amazing today. So I hope the week is also treating you very well. Today is Monday. The market opened with a very decent gap right here on the dollar index, and you can see the reflection of that on the pair like dollar Swiss, Kiwi dollar. It, as a matter of fact, on all the major pairs, and these are very important to take note of. First off, what's happening to the dollar? I mean, you can call it repricing, you can call it lack of consumer confidence, you can call it lack of investors, or let's just say investors are losing faith in the fiat currency, or let's just say they're losing faith in the in dollar itself, right? I mean, you can see central banks are all around the globe. They're all holding more gold and silver because I mean they can't still price or back their currency with gold because it's gonna make it super hot, right? It will be very hard to reprice to manipulate the rate. That's what I'm trying to say when I said reprice. All right, but they need it, okay, to just keep themselves afloat, to prepare for the uncertainties, especially as regard geopolitics, conflict, geopolitics scenarios that have been playing out in the past couple of months, right? So central banks are holding gold, they're holding silver, copper is coming to play, platinum is going up, right? All these assets are very hot right now because they are getting some very heavy demand across board from physical holding to central bank edging some of their treasuries with gold, right? So all these things are coming up, and we have President Trump also talking about they need a weaker dollar so that it will encourage investment. Like if they need a weaker dollar, also a weaker rate so that it can encourage investment, and a weaker dollar in the sense that it will also encourages domestic production. It will encourage export. Right, people will be buying the dollar. People will be buying United States made products. When the dollar is cheap, it will be much easier to patronize the United States. That is what that literally means. So all of that is affecting the dollar, and when the dollar is pretty weak like this, you should be able to read between the lines, right? So, but that all of that aside, okay, let's focus on what we have on the chart. And as you can see, we have our range still playing a very pivotal role in the market right now. Okay, we have multiple resistances, right, and we have some very interesting supports as well. Okay, and the market is still ranging between 100.6 region to 90, I believe 96.2 region. All right, that is the massive range. 100 region here, 96 region there. All right, and potentially, okay, we have a gap here. I think I talked about that very early in this video. All right, we could see, all right, a possibility of a very decent retest of this 96 region before we now get the pullback, right? Because whether we like it or not, there is going to be a pullback, right? But this week is going to play a very pivotal role in the market. We have the Fed funds rate coming on Wednesday. You want to pay very close attention to that. I mean, we have quite a very interesting fundamentals this week, and I'm very sure you've checked the economic calendar. If you haven't, let me quickly share one or two with you. Right here, we have the data coming this week. All right, we have CPI in Australia. This is on Wednesday. Okay, Monday and Tuesday we have a flat data. Okay, there's nothing scheduled. And on Wednesday we have Bank of Canada restatement, monetary policy report, and just the rate decision. Okay, they're planning to leave it unchanged anyway. It's the same thing with the Fed funds rate. All right. However, the projection and their stance on the economy is going to play a very, very big role on how all of these things are played out, how dollar is panned out. So you really, really want to pay close attention. And then on Thursday, we also have the unemployment claim. That is also a very interesting data you want to watch out on. Now, all of that said, okay, heading back to DXY, okay, like I said earlier, I said that there is high possibility of getting this, okay, a pullback, potentially back to 98, all right, or maybe back to this particular low right here. We have a low here, we also have a low here. So potentially we can get a pullback to retesting this particular region at 97.8, or we can get a pullback to testing 98, or 98.2, all right, before the massive continuation to the downside. Okay, if you ask me, I think once we get a break below 96, all right, once we get a break below 96 right here, I think the next target will be 94.6 or 94.5 literally, all right, this particular demand here. So dollar index here have a lot of play in the pocket. And this week will play a very pivotal role on how everything actually play out. So you want to sit very close to the dollar moving forward. Okay. Now let's talk about some trade recommendation for this week. I officially closed my NZD position. Okay, after roughly around 6% RR. It was a very good trade. I still have a very tiny 0.02 buy from here that I'm still holding on this one, just in case we didn't get a pullback, so I can keep following this till the end of time. All right, but personally, I think NZD dollar is due for a pullback, and the pullback should be falling towards the 0.58 region. Okay, the 58 region is where I will be drawing the line for a potential new entries. Okay, this is the daily time frame, so this might take a day or two to play out. That's why I'm just gonna watch out. Once we get a very decent pullback, you might get another video from me. And NZD is something I'll be looking forward to. Okay, because I believe there is still more room to the upside for NZD dollar. There's more room towards the upside. I'm talking about 0.61 region. Okay, there are more rooms for NZD dollar. So watch out, watch out, watch out on NZD. Dollar yen on the other hand, yesterday, the last video I recorded, all right, we didn't really talk at length on dollar yen. I simply just briefed it. But today, I think we should talk a little bit more on dollar yen. We can see that dollar yen broke some very interesting. I mean, this gap was across board. You can say it when I was talking about NZD. Now we're seeing it on dollar yen as well. And one thing about the yen is that the sentiment, or let's say the anticipation of the Bank of Japan intervention, is playing a very big role on the yen pairs itself. Okay, we can see almost all the yen pairs dropped on Friday, and all of them gapped down today. So this is very interesting, and we have to watch out because when it comes to DXY, all right, yen itself, or let's just say dollar yen, okay, UJ right there is a very important currency pair that people use, or investors, or let's just say experts use, engaging the dollar itself. Like when we see a very weak yen, we know that there will be an edging going on. Okay, I mean, carry trade is gonna happen. People will borrow money from Japan to invest in the dollar, right? Because they know dollar will always have a higher interest rate than the Japanese yen. So it's always an influx of money in and out when it comes to dollar yen. So when you have something like this, and Bank of Japan is pretty silent on their intervention, so you have to watch out like what is going on. And we've talked about Trump talking about weaker dollar. We've talked about investment losing their confidence in the dollar, and generally people are also losing trust in the fiat currency, like the paper currency. So all of these things are playing very, very interesting into the currency market that we all love to trade. So enough of all this jibby jabby that I'm talking about. Maybe you even know more than me on this aspect. So in my personal opinion, based on technical perspective, I will say that I'm expecting a broader drop or a deeper drop to like 152.8 on dollar yen. Then maybe we can get a pullback back to this region at 155. Whatever happened from there would be very important to take note of. Okay, let me say that again. I'm expecting maybe another drop to 152.8 region. After that, I'll be plotting my Fibonacci and will be waiting for a 50% Fibonacci that will likely fall around the zone, which is at 155.50. All right. So that said, right here would be where I will be potentially shorting dollar yen back to 149, right? Or if we now get a break above this 155, something like this, all right, that will now give me, something. I'm gonna get something like this in that regard. That will give me a better shot at buying dollar yen. All right, this is what I'm trying to say. Again, let me say that again so that it's much clearer. So we have this zone here, all right, at 155. Simple. All right, I'm expecting a drop, a pullback, something like this, and then a sell-off. Right, that is the first play. All right. So if this is not the case, and what we got instead was a break to the upside, a pullback, right? Something that looks like this, I will be looking to buy dollar yen all the way back to what 162 that I've been talking about for a really long time now. So these are the two play on dollar yen for me, and I'll be looking forward to that. The other trade I'm gonna be talking about is gonna be a minor pair EURUSD. I just spotted this today, and it's giving a very good short sell opportunity All right, even on the daily time frame right here, you can see we started right here when the market made some very interesting bullish channel, which was quite decent. At the top where we got the divergence, and that led to what a very massive sell-off. All right, which kind of take place in December through January, right? So now the plan is to see. I mean, we've had one, two, three, right? So what I'm expecting is a pullback. Okay, A, B, okay, C. I want another leg to the downside for this C back to like 61.8% before we now start looking for a potential buy from the bottom. I'm talking about 1.95. All right, that will be where I'll be looking for buy on Euro NZD. But before we now start looking for buy, and why did I say we're going to be looking for buy? I will explain that later. But let's focus on this particular trade call that we are looking to take. Anyways, we have one, two, three. Okay, the major structure has been broken, and this structure has been there since I believe October, right? We have support, support, support. Broken in January 2026. Now we are expecting it to be used as resistance. That makes this place a very important key zone, right? So once it is used as resistance, we'll be looking for a potential short. This should give roughly around how many pips is this? Let's measure it. All right, from there to there, that will give us like 500 plus pips. That is something that you can be happy about, right? If it plays out that way, and we're going to be using maybe 150 stop loss, so that should give roughly around 1:3. So I'm talking about if this trade actually play out that way. Okay, our stop loss will be probably above here, right? It would have been better if you can put it above here, but that would be too much because once it breaks above here, pull back, there's no point in holding it again. All right, because relatively this pair is very bullish, so there's no point in holding it for too long. All right, so we're going to be shorting to 1.95 region for sure. And from there, you can see we have a very decent demand zone there. Okay, we also have another demand at the bottom here at 1.92. So 1.95, let's say TP1 or let's say ultimate TP. However, if we break below there and touch 192, I guess we can also extend the TP to that region. Now, we're going to be buying from those regions later in the future. But why are we going to be buying? Because I mean, look at this. This is a very clear bullish trend. Okay, and it's been there since 2020, 2023, literally. Higher high, higher low, right? Higher high, higher low, right? The market range a little bit, excuse me for that, a range for a while, right? A little range here and there, and then we make another high here that broke above this previous high. We had a low, we had a high, low, and then we had this massive high. So, in my opinion, this is a massive bullish trend, okay, all the way to the upside. So nothing is gonna change that, in my opinion. As a matter of fact, I would probably be placing something here, which is gonna sit as the ultimate structure that can be like the invalidation zone. Okay, I might even extend it to this region. All right, anything that makes this particular pair cross below, all right, and that makes this particular pair cross below this particular structure here, this resistance and this support. Okay, we have multiple resistance and multiple support, 1 2 1 2, right? So anything that makes it cross below here, I think we are now fully in the bearish zone. But anything above here is still bullish. So that is why I said I'm going to be buying later. Okay, and that's the explanation I promised I'm going to talk about later. However, a short sell is possible. Okay, a short sell is possible after the pullback that's going to retest 50% Fibonacci. We should be looking for a short sell on Euro NZD TP1, all right, and maybe TP2 at 1.92 and 1.95 respectively. All right, so that could be something you might be interested in. I'm not sure I'll be targeting anything below here. I'm not super sure. But first off, let's even wait if this particular pullback is going to happen. Because if it does happen, we're going to have a key zone. I'll be looking for a couple of things at the top there after the pullback. And then we're going to be getting a retest of this particular trend line as well. All right, this one. So we have a lot of confidence we're watching out for on Euro NZD. If we get it, it's going to be sweet. If we don't, then the market can also just play itself out without us. Nobody cares about that, right? So that is my take on Euro NZD, dollar yen, and Kiwi dollar. All right, so gold. I think gold is making a very massive dump right now. As I'm speaking to you, it's dumping, and I guess it's about time. Don't forget what I said yesterday. When it comes to gold, you don't want to sleep on it. Okay, let's go to the 4-hour time frame. When it comes to gold, you don't want to sleep on it. And I said that if you're going to be buying gold, I'm still holding a buy on gold. Don't forget that. I don't know where all my drawings went to, but I bet it's gonna be showing up later. That should be my internet playing chicken. Anyways, back to what I was trying to say. Moving on gold, as far as I'm concerned on gold, I think we have a couple of demand, all right, an intraday demand right there. We have another demand right here, and then we have another demand right around here, right? So, I mean, we have a demand here, which also kind of like fall pretty close to a key zone, I must say, because let's pick this particular bottom and go good. This particular top, fine. Right. So we have what we can call a resistance here, and we have what we can call support. But the pullback is, I'm not sure it's something that's going to last for long. All right. So maybe a pullback to 4,900 and gold will rally back to the upside. This is an extreme demand on 4-hour time frame based on what we've seen in the previous market structure, right? 4,900, I would classify that as an extreme demand, okay? The second region would be right below here, which is going to fall at 4,720, all right, as a pullback, okay? Also, you can look for buy. And lastly, we're going to get this key zone here, which is roughly around 4,500 to 43.50. Okay, now I'm going like, okay, that might be weird, right? But I think these are very interesting and important levels, all right, that you should look into for a potential buy on gold. These are swing positions, okay? So watch out very closely. I'm not sure RSI is going to drop deeper than maybe that mid RSI at 50. I'm not sure it's going to drop further than that, but just keep a close tab on gold. Okay, it can be a very good opportunity for a potential buy. I told you everything's gonna come back later, and here they are. All right, so my buy is still running. Okay, I would just love to add to this, but I'm not gonna be adding at the top here and adding at the top here. That would be very ridiculous of me. And I used to tell you guys about some trade positions that are weird and ridiculous. I'm trying to get one for you before I go, but I'm not sure I will be able to because my internet is a little bit draggy. But I've seen people, right? People buying gold at the top here, and gold still went ahead and gave them some profit. I mean, just imagine that kind of craziness. But anyways, is the gold market. People trust it now more than ever before. So I guess he has a chance. It gets to have that kind of break. So let's give it what it deserves. Guys, I'm gonna see you tomorrow. Stay safe, enjoy yourself. Bye for now.